Quickly, my name's Amanda English. I graduated from here in 2016 with finance and economics double major. I started at Bloomberg the summer following graduation after interning the summer before. So I interned prior to my senior year and then joined after graduation to the equity fundamentals team. So what we're responsible for is getting company financial statement data up onto the terminal. This includes like press release filings, 10Ks, Qs, supplements, etc. And what I work doing now is doing a lot of that data maintenance and acquisition work, but in direct support of the equity research team at Bloomberg, Bloomberg Intelligence. So we're much more catered towards industry-specific data and gaining a further understanding of what's driving the market for a given peer group of companies.
Yeah, I'm Brian Panisi. I graduated 2016 as well. I was in finance and IS double. I'm on the funds and holdings team, so things like exchange traded funds, ETFs, mutual funds, hedge funds. I'm a bit more involved on the technology side of things. Specifically, we try to automate a lot of the processes that we use, and one of the kind of topical things in the information sciences in general is machine learning. So we build out platforms to try to kind of speed up some of the things that we're doing using that sort of field.
I'm Brittany Anderson, and I graduated May 2018, so just last year, and I started at Bloomberg this past July, and I work on the holdings team that's now known as the ownership team, and basically my team covers who largely owns the shares of a company, so people with high percentage of shares and people who have an inside relationship with the company, so the CEO and other people on the board and other people with voting rights towards that security. We kind of provide transparency of who owns this, how many they own. We go through public filings straight from the exchange and get this data and make it available on our screens to make sure it's user friendly, and just a lot of other things on different investor types and what they own.
Cool. So we'll start off with some of the basic functions. I know you guys have some background, so I'll just be quick here. First one is going to be company news, which is for any given company, you can queue up news. If we think in the context of the trading challenge that I know you guys are working on, we can use this to quickly pull up news on a given company. The function is CN. A quick aside, Bloomberg is an information aggregator, right? So we're bringing in information from the Wall Street Journal, CNBC, all those good places, as well as our own sources, and some places that you may not even be able to easily find on the web. And we're doing so in real time. So this is very much a good place to be if you're trying to find company-specific information, right? As we know in the markets, stock prices move in real time and they react to information accordingly. So if you see a jump in the stock market in the middle of the day, this is a good function to go to where kind of our system will make sure that we have the most relevant news all the way at the top here. And in turn, you can also set up alerts to be even more quickly attuned to that information that's coming out. So just to give a quick example of how to set up an alert, it's the ALRT function. And then from here, you can kind of manage your alerts. You can create an alert here. In this case, if we go down, you can kind of look at different themes for it, or you could follow a specific stock. We'll go here, make a new one. And then really from here, it's pretty straightforward. All the way at the top, enter or select a security or a list of them. In this case, you could just do Apple. You can add kind of additional criterion to look into different subsets of Apple, maybe just related to trading signals with the stock price or just related to earnings or something like that. The nice part is it has some overlap with some of the functions that we have, so you can kind of narrow it down based on some of the ways that we look at things, such as some of the functions Amanda is going to go over, like earnings estimates, ANR, and other kind of forward-looking sentiment on these companies. From there, I'll mention as a quick aside for global data, as we talked about a little bit, we do a lot of different things. We manage data, we engineer it a bit, we build applications off of it, and also as data analysts, we're kind of the purveyors of this information. we are seen to know more about it than anybody else. So when people like Bloomberg News, which you'll see on Bloomberg's TV channel, you'll see it on Bloomberg.com. They put out content. They're coming to us if the information that they're looking for is kind of the data that we manage as well. So there's actually a news wire internally that tracks all of the work that data has collaborated with our news team on. Right? And what you'll see is that we, I think last year, published well over 1,000 stories in collaboration with news. So it's just another example of like somebody that's traditionally like a data analyst driving also content, having the opportunity to put content out based on information that we do know very well. Lastly, as far as like a basic overview, we'll look at Apple again, and we'll look at the description page. Back into the context of the trading challenge, thinking about all the different things that you can do. Where would you start? Maybe you have a company that you're interested in and you just kind of want to get a general overview of it. This function, DES, which is short for description, is kind of your company-specific landing page. So there's a lot going on here. You can see on the right, we have the corporate information, management information. We also have our forward-looking data around earnings estimates that Amanda will go into. We have dividend information, and then we also have some price-specific information. And then you also have a nice little chart there that charts the performance of Apple over the last 12 weeks. Same thing that you'd see if you Googled Apple's ticker. It's kind of that first chart that comes up to kind of manage the performance and see how the company's price is tracked over time. Towards the top here, we have this BI research primer here. Basically, what this is the SparkNotes version of what's going on with the company, right? When you're investing in a stock, really all that matters is what's the matter going forward, right? What are things that the market hasn't priced in yet? And really, to know that, you need to know what drives the company's performance. Why do people care? What are the important things that are significant about a given company? For Apple, as we know probably very well, it's iPhone sales and other important components to their top line and kind of profitability. So looking into things like this research primer, they're going to give you kind of the main pain points, what's going on with the company, and things to look out for, especially if you're considering whether or not to buy the stock. You want to at least be aware of the general drivers of the stock's price, and then you can kind of make a more informed investment decision for your trading challenge. So I'm going to kick it over to Amanda at this point, who's going to talk a little bit more about some of the specific equity functions on the terminal here.
Cool. So like Brian said, this is a really good landing page just to get an idea of where do I even begin if I don't remember the name of a function. DES is always a great place just to go because all of these top headers are kind of drive you to more functions of the terminal. So like we said with the research primer, clicking into this gives you kind of a 20 paragraph summary of what's going on with the company. It throws in some charts so that you can kind of see the analysis and understand the commentary alongside a chart, and even see the research analysts that are kind of behind the analysis here. So definitely a great place to start once you want to learn more about a company, just to understand what are the risks involved with investing in it, what's the outlook, and then what types of data do I even need to look at for this type of company. Maybe it's an industry where gross margin doesn't matter as much as operating margin or something like that. It's going to give you a nice view of how do I proceed once I have this investment idea. Also, like Brian said, the 52-week price chart, definitely a great place to start with just gaining an understanding of how has the market moved for this company previously. Something that's cool within DES, you can click into this price chart and it kind of creates it on the fly for you. You can also check off this key events checkbox, and it'll throw in like hot news stories from different days where the price moved drastically. And these are all, you can click into them all to kind of see what
what caused that, what was the story behind that act or that price move that day. And from here you get to start thinking of, okay, previously how did the price react when this type of news event happened? What previously happened on days that they reported earnings? You start to think of how the market moved on those days so that you can start to build ideas around going forward, because that's going to be the most important part, is understanding, okay, so now what? The price is here where it is today, but if something comes out tomorrow, what's the investor sentiment? Do they feel like Apple's going to go up in the next 3 to 6 months? Is it a long-term investment? What do we really plan for if we buy this investment? And a nice place to start with that is looking at, we'll start with EE. So EE is the earnings estimates kind of landing page function, similar to DES, but for estimates. And this will kind of take you to a summary of other types of functions we can go to see data about estimates. So I'm going to start with this first button, this earnings history. This is going to take me to a view of the prior quarters of reported data. So this is looking at EPS. I could also look at revenue or something like that, against what the street was estimating it to be. And that'll calculate out a surprise metric. So what this is saying is, how well did the company do compared to what it was expected to do? What would you say would be kind of the sentiment if this is a positive number, if the surprise is positive? Would investors be optimistic? So then would we expect the price to increase when the investors are optimistic? Yeah. What might be a reason that it would decrease? So we see that in this Q4 2018 reported in November that there was a positive revenue surprise. There was also a positive EPS surprise, but price dropped 6% that day. What might be something that isn't baked into maybe one of those reported numbers that could have a negative impact on price?
Just like news stories in general.
Yeah, so sentiment otherwise, maybe outside of the previous reported quarter, what's the looking forward? Maybe they said something in a conference call, or they announced something they're looking forward to in the next 3 months that might denote pessimism or something that the market needs to kind of adjust for because they were previously optimistic. What actually happened here is that they announced that they were going to stop disclosing one of their key metrics. So they used to report number of units sold of all of their product lines and also average selling price. But if they maybe see that that number is going to start decreasing, or they don't feel like it's going to be such a key driver of their performance going forward, they said that they're just not going to disclose that number of units sold value anymore. And investors reacted poorly to that because maybe, again, it shows lack of confidence or something that's coming in the next couple quarters that isn't optimistic. So kind of going off of that mindset of thinking forward and looking forward to what the next quarterly values are going to be, we can go back to EE and look into this chart down here, the EEG chart. What this is going to show is the change in a single estimate over time. So back in 2016, the 2019 Q2 period was estimated to have an EPS on average of, that's price, of $2.52, $2.52. And over time, that estimate was adjusted due to more information becoming available. Maybe the assumptions changed when a broker was modeling out the company. They'd get a new period of data, they'd adjust the growth rate that they plan going forward, and they make adjustments to what they think EPS will be in Q2 of 2019. Well, when that quarter reported and the price dropped that one day, we also see that that has an impact on forward-looking quarters. So maybe because of the sentiment that came through about the lack of reporting going forward, maybe everyone thinks the growth rate's going to slow, that Apple's not going to have as much revenue from iPhones going forward, whatever. And that kind of took a toll on the forward-looking estimate for EPS in 2019 Q2. So again, this is a good way to kind of see how the market has reacted historically to news, and then also start planning for news going forward. Maybe something will happen tomorrow, and if you choose to invest in it today, you kind of have to be prepared for that risk. Cool. So the final estimate related function I wanted to go over is ANR. This is the analyst recommendation function. It's a really great tool to use kind of to recap your thesis. So if you're looking into a company, you see all of the benefits, you've outlined some risk, and you've planned for it to be a really solid buy. Maybe you come here after the fact to evaluate, make sure that everyone else is on the same page as you. So what this function does is it aggregates the buy, sell, hold ratings across a variety of analysts, as well as their price target. So what this is telling you is that half of the universe of analysts that contribute to Bloomberg say that Apple is a buy, half say that they're a hold. Their rating is on a downward trend, so this 3.93, it's out of 5 being a strong buy, is kind of on a decreasing trend. Maybe this is kind of an outlook for what's coming up for Apple. Maybe right now it's not the best buy compared to its status maybe 6 months ago. You can see on this chart. So this is a good place to kind of come and confirm that you're not missing any risks that you maybe haven't baked into your analysis yet. Make sure that kind of everyone who's also doing really deep dives into Apple is accounting for the same things and expecting the same future. Cool. So EE, ERN, and ANR are the 3 estimate functions that we went over. And now kind of to get to that place where you can model out a company and project out estimates and price targets, you need all of the actual data, right, from historicals. So the FA function, equity fundamentals, that my team covers, this is kind of the aggregate of financial statement data from historical periods. So there's a series of tabs across the top. I'm going to highlight the income statement to start. This is kind of a standardized view that can help with peer analysis because there's one template kind of across this industry of companies that's going to follow this same formatting, and you know that when we're calculating out gross profit or coming down to pre-tax income, like that's all going to be on the same basis across companies that follow the same format on FA. And some other things that kind of come with that within the other tabs are similar ratio analysis, so you can see growth versus profitability, working capital. These are all kind of standard accounting formulas that analysts analyze, but this can kind of be used to see how it's improving historically for a company, and then those same kind of fields can be used across the peer group as well on functions like RV that you guys have used. Cool. So another cool thing within the FA function is this segments tab. So this will kind of break out a company's major line items or industry specific line items, just depending on disclosure, by their product lines or by their geographic breakdown. So if we were to take something like iPhone revenue versus iPad revenue, we can kind of trigger this little chart right on the side and look at a historical comparison of how these two different revenue streams are growing or declining against each other. And like I said before, it's going more towards the idea that what the market moves based on is these more granular metrics. It's not just top line revenue, it's not just EPS, it's are they even disclosing these values going forward? What is the growth of average selling price? We could see on here that there's average sale price of iPhone. Well, right around, we would expect this to go up, right, because of the iPhone X and the higher price point. So these are the types of things that are moving markets now. And with BICO and the research primer there, as well as kind of getting more granular in the amount of data and metrics that the fundamental function supports, that's where estimates are going as well. So brokers have whole full models that project out these values. That's kind of our next step from Bloomberg to support that as well. So we really get the full picture of what's important to break out. Cool. So that's the FA function. We did estimates and actuals. And now we're going to do some other equity related functions that can kind of help in a more broad approach to analysis, less focused on the actual financial data. Cool.
Okay, so speaking of other functionality that can be used to start, I like to show HDS, which is one of my team's main functions, and HDS will show you who holds these shares and the ownership throughout. So again, we kind of show the large investors. So we have BlackRock, we have large investment managers, and then we also can see who are the insiders of these companies. And those people, like I mentioned, if you go to the people who are on the board, people who have voting rights. So here it will show you the first person is the CEO, Tim Cook. So if we look here, we get an idea of who are the people who are on the board and have a big impact on if they sell shares, that's going to move the market, who's on the board. And so going back to HDS, we'll have some of those people listed, showing their amount of shares that they hold and showing any changes in the share amounts that they've held previously. And one of the data fields that our clients are heavily interested in is our float. So that calculation is basically just showing you the shares outstanding for that security. And when you compare the shares outstanding to the stagnant shareholders, again, the insiders and the people who are important to the company, you can see what's left over from the shares outstanding and subtracting the stagnant shares. Those are the shares that are left that are floating for everyday investors like us and other people who aren't considered insiders of the company. So if float is either decreasing from day to day or week to week, and people who are interested in this data will look at that and say, okay, if I see that the float is decreasing rapidly, that means that more and more insiders are acquiring shares and making less available for other investors that aren't actively interested in the core of the company and what the company is doing as a whole and how the decisions that they could be making. So that's definitely something that's useful to look out for. And again, looking at the management board, looking who's involved and kind of watching how they're trading. And then another one that we spoke about was M&A, which gives information on mergers and acquisitions. So you can run that on any security to get an idea of when did this merger happen and did that affect the share price. You can look at company news and see, you'll most likely see a merger that comes up on this will also come up on company news. So it's helpful for investors to kind of see in many different places what's occurring and why share prices have dropped or why anything has made a change. And one more thing I wanted to show on HDS that I forgot to show earlier was our insider transaction tab. This tab will show you different buys, different sells from insiders or different investors that we have listed on HDS. So it will show Tim Cook acquired this amount of shares on this date, and you can press into it and just get a little bit more information and kind of look for the reasons why that happened at that date using company news or using different functions that we've shown in the past. And then we also have correlation if you want to go over that. It's kind of another functionality that we use.
Yeah. Thanks.
So correlation could be helpful for you guys, especially when you're thinking about which companies you want to buy in your trading challenge. Maybe you want to change your positions over time. I know you guys are being measured on absolute performance. So one of the things that may be helpful if you want to go for a more aggressive strategy, maybe you want to find a lot of companies that are highly correlated. That way, if they all do well, you might win. If they don't, then you might not look so great. Point being, though, it's high risk, high reward if your stocks are highly correlated. The converse to that, from a more practical investing perspective, is, as you guys, I imagine, may have learned in your investments course, when you put a bunch of securities that are loosely or negatively correlated with one another, you get what's called diversification. And that tends to be one of kind of the foremost investment philosophies that have guided what kind of people do and how you're generally advised to invest. So correlation from a practical standpoint, as well as in the context of your trading challenge, is a pretty relevant statistic when you're looking at making investment decisions. So to actually get into the function, again, it's CORR, short for correlation, go. And first thing you do, it's pretty straightforward. You create new. Really, all we're doing is, again, thinking back to the business statistics course that I'm sure we all took. You give it a time period, you give it periodicity, so we're going to look at daily price changes over the course of the last year. And from there, we can just kind of put in some securities. Does anybody have any companies that they want to see and look at the correlations of? Any companies we can think of off the top of our heads?
Johnson & Johnson.
Johnson & Johnson, all right. Any others? Maybe we'll throw Walmart in there. One more.
Costco.
Costco? Okay. All right. So from here, we will name this, and we will open it up here, right? So quick recap on what correlation is, right? It is a statistic that helps capture how similar things are. When things are positively correlated, that means in this case their prices are going to move together on a scale from 0 to 1, 1 being perfect correlation. On the other end of it is if two things are completely opposite or move in the opposite direction of one another. You'll see negative correlation. Correlation is 0 essentially means they're random and have no real relationship with one another. So as we can see at the top, this first column here, that's Johnson & Johnson. And that's compared to, this is the matrix, Johnson & Johnson, Walmart, and Costco. So the first column, second row, is the correlation between Walmart and Johnson & Johnson. And then down toward the bottom there, we see the correlation between Costco and Johnson & Johnson. Now looking at the two retailers in Costco, consumer retailers, I guess more directly, you see Costco and Walmart, they have a correlation of about 0.5, so somewhat significant. Why does this matter to you? Well, if you guys decide that you think maybe the retail industry is primed to take off in 2019, then maybe you want to buy companies that are similar to one another and both kind of share that exposure to retail, right? In that they stand to do well if consumers are spending a lot of money. So really what you can do when you know that two companies have performance that are correlated, you can generally say maybe let's just get one or the other because they tend to be very similar. That's really what correlation is trying to capture in the context of investment decision making, among other things. So this is useful if you have a particular kind of idea or like a theme that you want to quote unquote invest in, or if you just kind of want to narrow down the number of stocks you invest in while still getting like exposure to certain things or certain trends that you think are valuable. In other words, maybe I just buy Costco instead of Costco and Walmart because they have a reasonable correlation with one another. On the other hand, looking at Johnson & Johnson and Walmart, again, this is relatively marginal, but closer to a 0.3, 0.4 correlation, kind of semi-strong or on the looser side of things. Maybe you do want to buy both of them if you really do want to kind of get exposure across both of those companies because they're not as similar as Costco and Walmart are.
Question before you leave this group.
Yeah.
Can they also do correlation based on, for example, economic data?
So yes, so anything that is quote unquote tickerized, which just means you can like put in like a little
Like, do you have,
alphanumeric
new
code.
home sales or housing starts or something like that? Could they do a correlation on that versus like a builder?
Yeah, let's see. I would think so, but let's
Who
give it
builds
a try.
houses?
The only issue is you may have to make it. You may have to mess with the periodicity because a lot of our economic data is going to be as disclosed, so like weekly, monthly, quarterly, things like that. So we can try quickly here, see if they have the tickers. Let's just check like GDP. Yeah, right. So like you can see like how some of these things are tickerized. Like you can absolutely do those sorts of things. You just have to make sure that the periodicity.
Can we just try housing real quick?
Yeah,
Just
sure.
to see if it happens here.
Do you have any index particularly in mind?
No, I was just gonna do like a specific. Oh, you mean housing starts? No, I
Like-
didn't know if you had one or not.
Yeah.
Housing starts, new home sales, anything like that.
Let's see if we got one.
Mortgage interest rates.
So you got one family house's annual total. So like, you might not have a large enough sample to do that sort of thing, but like some of the quarterly factors may be doable. We could look at this 30-year fixed mortgage rate. Did you want to compare it with anything else in particular?
How about like Ryland Homes or something? Isn't that like a builder?
I like KBH.
KBH. Yeah, I'm thinking there we go. KB Home. There we go. KBH is like one of them.
All right.
And again, just trying to give people more broader ideas.
Yeah.
You do this more than diversification if you're starting to look at your portfolio and thinking through things that are correlated or not. So, in terms of negative correlation, changes in interest rates, KB Homes. Makes sense.
Yeah, absolutely. So one of those types of things, and this is good, like just like how we're doing here, you have a sort of intuition about how things should be. You can use a correlation matrix to test that and see is that relationship match up with your intuition. Maybe if it doesn't, maybe it's just the sampling period, but maybe it's telling us something that's a little bit bigger. So it's a good tool. Next thing is going to be port. You guys have your trading challenges. They're all portfolios because you've picked a series of stocks to buy and sell. So we're going to look at port so that you can kind of look at everything, look at all of your trades in one place, and do some analysis on it. Before I do that, though, I'll ask, how many of you guys have heard of an ETF or exchange traded fund? Yeah? All right, most of you. Great. Can anybody give me like a one-sentence explanation of what an ETF is? Okay, yeah.
I could be wrong, but it's like essentially just investing in,
A basket of securities, yes.
basket of securities, something like the S&P 500.
Exactly, yeah. So basically, the reason why it is such a great tool is because I could go on my Vanguard brokerage account and I can buy this ETF in the same way that I can buy Apple stock, right? So 25 years ago, if I wanted a basket of securities, if I wanted to go buy all 500 companies in the S&P, I'd have to literally buy all 500 companies in the S&P. And as we know, with companies like good old Amazon that are $1,700 a share, it's pretty expensive, right? So it's not really practical to buy all of these companies. And to take a step back, the reason why you would even care about buying all these companies is because that thing we talked about, diversification, right? But point being, for a fraction of the cost of Amazon, I can get exposure to 500 different companies with as much difficulty as it takes to buy, spend $100, $150 on Apple stock, right? And this is a sort of investment innovation because you can get diversification much more cheaply, right? You don't have to go out and buy all these companies. You don't have to be this big fancy Vanguard or BlackRock, this asset manager, to buy all these companies. You can just get simple exposure for a reasonable price. The reason that I bring that up is because I'm going to pull up an ETF here, and we're going to look at the holdings of the portfolio. Very popular one, the most popular one, is called SPY. It is just the ETF for the S&P 500, right? So it literally is doing exactly what the S&P 500 index is doing, right? So it's a passive index in that regard. And so we're going to pull up the holdings here. It may take a minute to load if last class was any predictor here, but to just kind of go over what you'll see. Again, this is report view. There are a few tabs up here. What you're going to see are the individual companies kind of make their way down here. In this case, we're grouping them. So we're grouping them by sectors. So you can think the financial sector, technology or IT, consumer staples, all those good sorts of things. When you're ever doing like general market research, the kind of main sectors that you'll see there. And then from there, there's these different columns that give you kind of like different intuition into where your portfolio's returns are coming from, right? So in your guys' case, you're going to have maybe 10, 20 stocks that'll fill down the leftmost column here, and you'll be able to look at things like the weighting and the contribution to return. So here we have the output here. In this case, like I said, because there's 500 companies, I'm just grouping things so they're nicely grouped by sectors. You can see at the bottom here, there is an intraday performance, right? So you guys can do this too when you load all of your companies into Port, which I'll show in a minute. You'll get kind of live data based on how the stocks are actually doing. And the nice thing is Port does all the calculations to kind of aggregate it into just one simple performance metric here, which is telling us that right now the S&P or this ETF is up about 37 basis points or 0.37%. But looking at some of the columns here, you have the weighting, right? So as we know, technology is the majority of the S&P because those companies are the biggest companies, not just in the States, but in the world. So in turn, the Apples, the Netflix, the Facebooks of the world are kind of making up the majority of the tech sector and kind of in turn the entire U.S. quote-unquote stock market, using the S&P as a proxy here. And then you can kind of see some of the other sectors that we have. We have financials. You can expand this here because these are grouped, and you can see Amex, AIG, Aflac, and then you'll see your big banks in there and things like that. But the kind of the important component here is when you have 10, 20 companies all in one portfolio, it's pretty hard to simultaneously keep track of everything. But the nice thing is here is they have this column here called contribution to return. And basically what that's doing is that's saying for your portfolio, based on kind of the relative weightings that you have in the portfolio, so maybe you bought like 100 of Apple, but only 1 of Microsoft, right? Apple's going to have a lot bigger of an impact. You're making a larger bet on Apple. So basically this contribution to return just does kind of all that math for you and boils down to kind of one raw number in terms of like how many basis points is, in this case, healthcare contributing to your portfolio today. 4 basis points, right? And if we kind of change the filter to just stocks, individual stocks themselves, you could see it on the individual stock basis. So you made a large bet in Apple and Apple's down, you're going to see a very high negative red number in contribution to return. So from here, I'll show you guys how to make a portfolio. Basically, this is the kind of thing that you can export all of your stocks into Excel and then just take a list of those tickers, right, or those stocks, drag and drop them into this PRTU function, and you can use that to kind of start analyzing these securities. Any questions so far on Port? Cool. So we're going to make an example portfolio. It's really, you can create it very as simply as just filling out this first box here. We'll just call this UMD test, and we're going to create it. Couple things to point out here. This is the as of date, so when we are making a portfolio, we're essentially saying, let's go ahead and pretend that we bought these stocks as of here, right? So in this case, it's going to be the 22nd of February. We're going to change that so we can get a track record. So I would, make sure you guys know when you actually entered the position of all your securities here. But we'll go down here, we'll modify that, and we're going to go ahead and throw some companies in here. Anybody have any companies? Square. And then I will throw in Walmart again, and we'll put in Johnson & Johnson. All right, so here I'm going to keep it simple here. We have our 3 securities. Like I said, you can drag and drop more, but in this case, we're just going to buy one of everything. So essentially just buying. We now have a portfolio that's worth about $300 because we bought one of every single stock. And going back to the example that I mentioned on why ETFs are so great, you obviously can't buy a fraction of a stock, at least easily. And imagine trying to actually go and buy all of the 500 companies in the S&P. You can imagine how that 300 would balloon to a very large number very quickly. One share of the SPY ETF is about $200-300. Right, so just to put it into perspective, it's a very practical means of getting a little bit of all these companies. So from here, we now have these companies. We're saying let's pretend we bought Square, Walmart, Johnson & Johnson, one share each on February 1st. From here, you just go to the Analyze function, and it's going to open up a pop-up window. You can see kind of the similar view here. I'm going to get rid of the sectors that we have because we have very few companies. But in the name of expediency here, it may take a minute for these to load. So I'm just going to move over to the Performance tab. This is the kind of thing that you may want to be watching because this is going to tell you how well you're doing in your trading challenge, right? Or at least it's one of the ways of doing so. So we were in the Intraday tab, right? This is performance, so this is like backward looking or looking over a holding period, right? A holding period just means, hey, let's say I bought it on February 1st and held on to all these things. Based on what the prices are today, am I up or am I down? So we'll go to total return. So we're including dividends. And you can see here basically how we've done. Now, one of the things that may be prudent to do if you're really competitive is compare yourself versus the market. Basically what we were showing over here is in white we have our sample portfolio made up of the 3 companies, and basically what this is telling us is that on day 0 we obviously made no money, but all the way through our entire holding period we're at about 4.5% up, and generally because these stocks tend to move in the same direction as the general stock market or the S&P, because they are literally components of the S&P, and for a number of other reasons their performance is related to how U.S. companies are doing. We can see that they seem to kind of move in line with one another, or they're highly correlated. Another thing that tracks this that you guys have probably heard of is beta. Beta of kind of this portfolio is probably relatively close to 1, or if not slightly above 1. Point being, though, this portfolio is beating its benchmark, right? It's beating the major U.S. companies in the S&P 500. That is kind of a means of what a lot of asset managers in the industry kind of evaluate their performance off of. There are millions of dollars of competition going into these sorts of things to say, like, can a manager beat his benchmark? Like, are you better than just doing the do-nothing strategy that any one of us can access right now on our brokerage account? So yeah, this is probably a good thing to reference if you do want to see how your portfolio is doing. And from there, I'm going to kick it back to Amanda and give her the opportunity to go over a couple more equity functions that may be helpful for you guys.
Cool. I'm gonna so this is kind of not super common in financial analysis, but it kind of is a cool spin on things. If you guys are interested in looking deeper, supply chain, SPLC, is a data team that we have that researches the customers and supplier relationships between companies and their customers and suppliers. And then they quantify that relationship using percent of cost of goods sold or percent of revenue that's attributed to that relationship. So if we keep with the Johnson & Johnson example, because we can kind of all relate to it, right? We can go to Target, we can go to Walmart and see Johnson & Johnson products, but we also know that before it becomes a Johnson & Johnson product, there's also other production that must go into that to get it to where it is. So if we use this as an example, we see that Cardinal Health, a healthcare company, Amazon, CVS, Walmart, those are all the highest contributors to Johnson & Johnson revenue. And then the coloring is all done based on a series of different kind of scales. So right now it's being colored based on latest sales surprise. So like we talked about before, surprise is going to measure how well the company beat or missed the estimate the prior quarter. We could also do something like inventory growth for retailers, probably probably something that we can look further into, or price change if we're looking from a valuation standpoint. But from each of these relationships, we can also click into the customer or supplier in order to see the further relationships that can be implied through that relationship, like the relationship of CVS to these other providers as well. Cool. And then I guess kind of dialing it back to more relevant towards classwork that you guys will be working on. EQS is our equity screening function. What this means is that we can take kind of ideas that we have surrounding the types of investments we want to make, put thresholds on that, and then this function will provide you a list of tickers that kind of satisfy that criteria. So something maybe we want to look into, the exposure that companies have to the United Kingdom or are most influenced by Brexit. We can search for geographic revenue that's disclosed by the company, just like we saw on the segments tab of FA. And we can determine exposure to the United Kingdom. So if I search that and have it included in my search, maybe I want greater than, let's switch this to geographic revenue percent so that I can search based on a percent. United Kingdom. Didn't work. One more time. So it's not working. Okay, one more time. Okay, it doesn't want to work. Let's see. All right, there we go. So I'm going to set the periodicity to a year and say the percent of revenue from the United Kingdom greater than, let's say, 10%. Isn't there? And then let's narrow it down to companies in we'll stick with the S&P. So see what global companies are most exposed to the United Kingdom in as a reference to exposure to Brexit. So this button down here, see results. We can see that the following 14 companies have set revenue that it represents more than 10% from the United Kingdom. Now, something else we can also throw in here is geographic net revenue. So net revenue is the metric that's used for the financials industry. So if we throw this in here as well, then we can set it so we can ensure that we have representation across all industries rather than just non-financials. So I'm going to select latest year for this as well, do greater than 10, and then make sure that I change this to or previous criterion because the companies won't overlap. And see how many results. Maybe we didn't get any more. Cool. Let's see.
Go to 5%.
Yeah. Just trying to. Maybe the field's not working, but from the standpoint to make a point, this is something that we can filter on to try to evaluate different exposures. We could also do this in different regions or in different industries. So if you want to see, if you want to exclude any company that has a presence in like the coal industry or something that maybe you don't want to be invested in, you can also kind of add criteria to exclude certain industries. You can do thresholds like revenue growth greater than 10%, market top 10 companies by market cap. There's a lot of different things that can be screened on in order to further narrow down a universe for investment thesis. And the second thing that's important on this function is this formula button in the top corner. What this is going to allow us to do is to create custom formulas by our own calculation. So if we want to use company reported values and then create some kind of margin or a spread between two values, we can use this function, name it ourselves, and then use it throughout EQS and RV across companies. So we're going to do an example now that's going to be used in your class. It's for no plat. So the calculation is going to be EBIT. So we're going to search for that. It doesn't show up in the top, but we want pure EBIT. So just that. We're going to do latest year and update that. And it kind of translates it into Bloomberg coding. But down at the bottom, you can see that it's written out in more plain English. And then this equation bar also takes all normal operators, so multiplication, addition, subtraction, and we're going to do 1 minus the effective tax rate. So I'm going to add another field in here, latest year, so it's all on the same basis, and then close the parenthesis so that the error doesn't show up. And now this equation can be saved and used in screens. And also in other formulas. So if we then wanted to take our custom formula and build a additional calculation on top of it, we can also reference the name that we just called it to create a new one. Yep. Yep. Yes. So then if I want to clear this and start over, I can take the one that I just created, it'll come in as custom field rather than screening or display only. Enter that. Again, it'll show up at the bottom of what it's referencing. And then I can do the division and then search for revenue. Also latest year. And then the calculation comes through on the bottom as well. And this can be saved. And then if you wanted to use that in this, yep. So then if you wanted to use that in EQS or on RV, you would just go to the custom template. I'll use RV as an example. And insert it as a measure on the custom template. Add it. And then you can do peer analysis on that. Something else cool on the RV function is that we can use the portfolio that you created in PRTU as your custom peer group. If you wanted to do analysis across your holdings, you can use that as kind of a personal or a more personalized comp source. And finally, from the column, you can also right-click and do graph cross-sectional. And this will kind of do the same peer analysis, but across, in a graphical sense. So you can see the peers graphed with the average line, etc. Cool. And then to wrap up before we hand it back to Melanie, the POP function is a useful resource just from, since you all have the terminal as a resource, there's a lot of contacts through the terminal and through Bloomberg in general that you can make. So this is similar to the EQS function. It's just a people search instead. So there's a series of criteria that you can search for. You can filter by University of Maryland and see the results of people that went here. The little second column, the status icon, or the email and little message box show that they're a terminal user, so they can be contacted via IB, Instant Bloomberg, or a message. And then there's also filters for company, for role, industry that they work in, and more. Cool. Any questions on any of those last functions?
So again, the key there is for your job search. If you're still looking for a job, you can find all the Maryland grads at Goldman Sachs and just harass them into giving you an interview until Bloomberg cuts off your access.
Yeah.
Just real quick, I always get confused with the supply chain one and what perspective we're looking at between like the revenue and the cost. Is it coming from the company? Like when you're looking at the customers and their revenue is like 3%, is that the company's revenue that is attributed by those customers buying products from them?
Yeah.
Okay,
so if I'm looking at, if I was back on J&J, you can see the numbers mimic each other whether they're on the customer side or the supply side based on what you're looking at. So if I'm looking at CVS here, it contributes 1.626% of J&J, or CVS contributes that percent of J&J's revenue, whereas if I'm looking at J&J from CVS standpoint, it's still that CVS contributes 1.26% to J&J.
But they're 0.64% of CVS's cost of goods sold.
Whereas, yeah. So if it's on the customer side, then you're looking at the revenue in relation to the center company. If you're on the supplier side, then it's the cost of goods sold in relation. Right. Cool.
Yeah, I'm gonna stop recording.
Awesome. Well, thank you so much, guys. So I wanted to briefly mention, as I